conference will now be recorded.
Okay, hope my screen is visible. So far I'll give a recap what we have discussed about so far. So we have previously in our previous class we have we have prepared our trial balance, and now we have segregated these ledgers based on the nature of accounts. Now what we have done, like now we have prepared trading, we are preparing trading and profit and loss account. So this comes under trading account. Now let's prepare profit and loss account. So profit and loss account is nothing but contains all the profit and loss account contains all the indirect expenses and incomes that helps you to run the business. So now out of these accounts, we have already used this purchase account. Let me highlight what we have used. We have already accounted this purchase, and wages we have accounted so far, and after that what we are, sales also we have done, accounted it. So now out of this, so this is the balance sheet item. We show this only in the balance sheet, and bank account is also a balance sheet, furniture account balance sheet, machine account balance sheet. Now this is the liability, purchase already accounted. Now we will get stationery, rent, wages, salary, depreciation. So these are only the expenses which I can see are indirect expenses, and we will only get, so there are no direct incomes, indirect incomes, only we have indirect expenses. So let's account that. Now we have stationery. So stationery, how much is the stationery? Stationery 50,000, rent 30,000, wages 50,000, salary 1 lakh. So stationery 50,000, rent 30,000, and salary 1 lakh, right? 1 lakh, and after that depreciation 60,000. So now let's balance it. So the balancing figure would be the profit or loss for the current financial year for the organization XYZ. So where we have the highest balance, in the credit side or debit side? Let's see. So here it is 2 lakh 40 only, but here we have 4 lakhs. So we will be taking this on both sides. So now the balance in figure would be in the debit side, correct? So in the debit side, the balance in figure would be, so balance brought forward. So how much it is equal to this amount minus this amount. So the balance in figure that would be transferred to balance sheet is this much amount. Okay. So now the profit and loss account in the balance sheet is shown under reserves and surplus. Okay. Now let's create the balance sheet account. So in the balance sheet, we will have assets and liabilities. So let's take the liabilities always comes under left hand side and assets comes under right hand side. So amount. Okay, so now let's see in the trial balance. So in the from the trial balance, what and all we can carry to the balance sheet. So capital account we can carry to the balance sheet. Bank account will goes to the balance sheet. Furniture account will goes to the balance sheet. So where I have mentioned assets and liabilities, these will go to the balance sheet and sit in their respective nature. So here now we'll have capital account. So how much is the capital? 20 lakhs. So after that, I said in the reserves and surplus account, will be showing under the reserves and surplus account, profit and loss account. So now under the reserves and surplus account, the profit and loss account shows as a positive balance, which is profit for the current year. So if you have a loss, if for example the balancing figure when comes in the debit side, then it's a loss, right? So now as it is a profit, we are showing it as a positive amount. But if you are incurring loss in the liability side only, you will show it as a negative balance. So after that, so we will be get. So if you see here, so what is the liability? So we have accounted this as a liability. I am highlighting this, and so we have shown the profit and loss account also transferred, and the next liability is Sundar and Co. We need to account Sundar and Co. So Sundar account Co is a current liability. Sundar and Co. Sundar and Co is 2 lakhs. So now, so all the liability side we have accounted. So it's done now. Now let's come into the asset side. So the first thing is we should identify what are the fixed assets. Fixed assets in the sense, so which will be lasting in our organization from more than like 1 year. For example, furniture and mission. So we have furniture and mission in our organization. So what is the value of the furniture? It is, let's see in the trial balance, it is 80,000. So what is the value of the mission? It is 2,60,000. So you can directly show the amount of the furniture, like the closing value of the furniture here, or else you can show like furniture. It's what is the value of the furniture? So it is 1 lakh minus depreciation. Depreciation is 20,000, right? 20,000. So you can show the furniture amount net value as 80,000. Right? Either in the balance sheet you can show this way for the furniture, or else you can directly show in this way, and in the notes to accounts you can show the impact. Now let's account the current assets. So under the current assets, what we'll get? Let's see. So furniture and machine is done. Under the current assets, I'll get bank account and I'll get ABC and co account. And also, if we see, we have accounted the closing stock for the year end. So year end, I have found out that the stock which I have will value 4 lakhs. So that also I should account in the current assets. Now bank account, and after that we'll get ABC and co, and after that we'll get closing stock. Which stock? Closing stock. So it is closing stock. Now, so the bank account is this, and ABC and co, we have 2 lakhs, and closing stock is 4 lakhs. So now let's tally the balance sheet. So the balance sheet where the liabilities amount minus the asset amount should be 0. So the liabilities should be equal to the assets. Let's see. So we have 23,60,000 which is in the asset side. Now the same amount I should get in the liability side. Let's sum it. So now the assets are is equal to liabilities. So the balance sheet has got tallied. So this is the way how you prepare the manual books of accounts. So based on the, so I'll give you a summary. So based on the basics, based on the golden rules of accounting, we will be, once the business transaction happens, we'll be identifying the what are the components we should debit and what are the components we should credit. So based on the golden rules of accounting. For example, capital brought to the business by the bank. So bank is a real account. So for that real account, how the treatment would be: debit what comes in, credit what goes out. So capital account is a personal account. So debit the giver, so credit the giver. So what is the account? So personal account, debit the receiver, credit the giver. So based on that, you are crediting the capital account. So after that, after creating the journal entries, you have identified now what are all the ledgers that need to be created. So we have created 13 ledgers. So if you see here, like we have given the numbering for purchasing 2 times. So that way only we have got 14. Now if you see, these are all the 13 ledgers which we have created. So based on these ledgers, we have created the trial balance, and based on the trial balance, we have created trading profit and loss account, and based on the trading profit and loss account, we have created the balance sheet. Now let's see how can we relate the manual bookkeeping with SAP. So this is a very important topic. So this is the place where things get interesting and no one in the market teach you about. Linking of manual bookkeeping, which is books of accounts with SAP. So now, for example, in our demo class, we have taken an example of XYZ Limited. So we have told that XYZ Limited is a company, and under this company we have company codes. Let's take this example. So we have XYZ Limited. XYZ Limited. So under the XYZ Limited, we have three company codes. For example, XYZ Manufacturing Limited. The second company is XYZ Retail Limited. And the third company is XYZ Services. Okay. So under the XYZ Limited, we have three company codes. Okay. So now these three company codes are accounted in chart of accounts. So as we have already discussed, what is a chart of account? So chart of account is the accounts in the master list of all GL accounts in the company. Correct. Okay. So chart of accounts is the accounts in the master list of all the GL accounts in the company. So it contains all the GL accounts. Okay. So it contains all the GL accounts. For example, if I want to get the financial statements of XYZ Manufacturing Limited, I will be pulling the reports based on the chart of accounts and based on the XYZ Limited. So let's take this example. So I have chart of accounts. It contains all the GL accounts, correct? So to get this chart of accounts done, I need to create account groups. So what are the account groups? Where you will be classifying assets, liabilities, incomes, expenses. So these assets, liabilities, incomes, expenses, you will be classifying it as account groups. So you will be giving a number range here. So if it is an asset, I am allowed to create that asset with only the defined number range. For example, let's take for 1000 to 1999. I am allowed to create the asset account, and for incomes, suppose say 2000 to 2999. For incomes, let's take 3000 to 3999. Now for expenses, it's the same 4000 to 4999. After I'll be creating the ledgers, general ledger accounts, Okay. So general ledger accounts, I'll be creating an asset account in the sense. So in as per our example, furniture account, I need to create, correct? As per our example, let's take all the general ledger accounts and let's classify. So I am relating our example with SAP. Now let us take all the general ledger accounts. So these are the general ledger accounts we have. And let's also create these ranges. So we have liabilities. So under the liabilities, we have reserves and surplus, and let's link it with our examples. Okay, so now I'll also deleting this. Let's take realistic examples. So now let me take liabilities, current liabilities, capital, liabilities. So so the reserves and surplus. So liabilities also we take current liabilities, capital, current liabilities, and here let's take fixed assets, current assets, fixed assets, current assets, and we also incur the what we say. We also need to create the general ledger accounts of stationery rent and everything. Correct. So these are the expenses and these are the incomes. So you have direct expense and direct incomes, and you have indirect expenses and indirect incomes. Okay. So now for this, you will be creating number ranges. If someone is creating the GL account of XYZ, they should create under an account group under a different number. So in my example, I am telling, so those who are creating the capital account should only use the range 1000 to 1100. So if anybody creating the capital account, they should only use this range. So when someone is using to create the current liabilities, so I ask them to 1100, right? So after 1100 is equal to this is equal to this plus 1. So from the next account, what will be saying from 1101 to 1999. So I am allowing them to create the current liabilities account. Now where come to the fixed assets, I am using the 2 series, right? So from the 2000 to 2200, they can create the fixed assets with this number range. So after that, when I come to the current assets from 2201 to 2999, they can create with this number range when they are creating a current asset. Now, so direct expenses, direct incomes, indirect expenses, incomes. So now when it is an expense, I want them to create with the it is a direct expense. The number range can be in between 3000 to 3500. And when it is when it is an indirect expense, let's take in this, let's shift this here. Direct expense, indirect expense, direct income, and indirect income. So when it's a direct, so now 3,501 to 3,999. So if someone is creating an indirect expense, they are only allowed to create that indirect expense under this number range. So direct incomes, let's take 4,000 to 4,500 and 4,501 to 5,000. So now the account group is done. So the account group I have created. So based on this account group only, we'll be showing the balance sheet, correct? So balance sheet is showing. So now we'll be now following the approach from the bottom up, in the sense, let's see, I'll tell you. So first what we do, so we need to post a general entry. To post a general entry, we need ledgers, ledger accounts, general ledger accounts, GL. So we need GL, general ledger accounts. So for to create these general ledger accounts in the SAP system, we need account groups. We need account groups. So for these account groups, we need chart of accounts. Under the chart of accounts only, we'll be creating the account groups. So we'll be linking these chart of accounts to company code. So if I want any report for this company code in this combination of chart of accounts, these and all need to be configured. So now what we have done, so accounts group. So account group is done. Now after that, so we have defined a chart of accounts for XYZ as XYZ is the chart of accounts for me. So we have defined the chart of accounts. Anyway, this chart of accounts is assigned to all these company codes. Okay. And now this is done. So now I need to create the general ledger accounts. So if I want to create the general ledger accounts, so if I want to create the general ledger account, if I want to create a capital account, now I am allowed to create in this number range only. Suppose I am creating the capital account with this 1000 naming convention, 1000 GL code, and it is a bank account. So for the bank account is an asset. So I am allowed to create the general ledger account for the asset only with this number range. Suppose I'll be using in the current assets, I'll be using current assets. So fixed assets, current assets, right? So for the fixed assets, I am allowed to create from 2000 to 2200. So now I am creating here bank account as 2000 under current assets. Will the system allow? Question to you guys, will the system allow? When I'm creating a current asset, which is a bank account under the number range, which is related to the fixed assets. I'm creating the GL account, bank account comes under the current asset. So I am only allowed to create the current asset in this defaulting number range. But I am using the number range which is related to the fixed asset. Now will the system allow me to create? The answer is no, because the system, when I am creating the bank account with the account group of a current asset, I should only use the number range for the current asset only. So I'll be creating it as 2201. Now the furniture. So the furniture comes under the fixed asset. So now I can create furniture as 2000 and it is 2001. And so now the purchase account. So how you will be creating the purchase account? So the purchase account will comes under the direct expense, indirect expense, direct incomes and indirect incomes. So I'll be creating the purchase as a direct expense, suppose say 3000. And Sundar and Co. So Sundar and Co. Who is the Sundar and Co? Sundar and Co. is the liability. So for us, Sundar and Co. will comes under where it's a liability. So in SAP, we'll be accounting the Sundar & Co is our vendor and ABC is our customer. So we will be creating vendor and customer as business partners. Partners. So for this, we will be assigning the recon account for the business partners. So I'll be telling you when we are coming into the topic. So now you only keep in mind that so recon account is also a general ledger account where we will be mapping the Sundar account. So the recon account is assigned to current liabilities. So when I am creating Sundar and Co account, I'll be bound to create in this number range. So it is 1101. So now the stationaries comes under indirect expense. So I'll be creating the stationaries under the indirect expense 3501. And whereas the rent and everything will be come under indirect expenses. Let's see 052 3053 3054. So now we can see ABC Limited. So ABC Limited is customer, which is an asset. Asset in the sense they are current assets. So I am bound to create in this number range 2201 to 2999. Already 2201 is taken. So we'll be using 202. So when you are trying to create the in the 2201 also, the system will trigger a message, error message like this account is already created. So please create with a new GL code. So now we have sales account. Sales account comes under direct income. So I'll be creating it in the under the 4000. So depreciation comes under. So wages comes under where direct expenses. Wages comes under direct expenses. So here you should use 3000. You'll be creating the GL account under the 3000. Now let's go to the depreciation. So depreciation comes under indirect expense. So I'll be creating this in 501. So now the GL accounts are created. Now what is the next step? Next step is I need to post the journal entry. Journal entry. For example, journal entry is furniture account debtor to furniture account debtor to bank account. Suppose say 20,000. Okay. So now if I post this journal entry in the furniture account, I need to see in the furniture account. When I call the GL account in the furniture account, I need to see the bank entry, correct? And when I call the bank account, I should see the furniture entry, correct? So let's take the real-time example and see in the SAP system. I'm opening the SAP GUI. Okay. So to see the balance sheet, we use F.01 T code. So to see the trial balance, we use SALR S underscore ALR underscore 870122277. 870122277. And after that, to see the general ledgers in SAP, we use FBL 3N. And to see the journal entry, to post the journal entry in GL account, in GL accounting, we use FB50. Okay. So now let's see in the SAP. First, let's relate our scenario in SAP. Okay. So first, let's see the balance sheet. Let's see the balance sheet. So I go for F.01. So now, what are the input screens you have? Chart of account, GL account, company code. So in our example, I have told like if I want to extract the data from the chart of account level, I can be seeing my financials with respect to one company code or with respect to all the company code combinations. So for example, I will give here we have YCOA as a chart of accounts which is created in the system, and so we have the financial statement versions. I'll explain you what is the financial statement version. So this financial statement version contains the GL account mapping. So under the lives and surplus, what are the GLs you can map? If I map only, I can show the GL account balances in the balance sheet. So when we are coming to the topic, I will tell you. So now what I am telling you is like under this chart of accounts, if I want to see the financial, if I want to see the balance sheet of XYZ Manufacturing Limited, I can give only XYZ Manufacturing Limited. Suppose say 1710 is the company code of XYZ Manufacturing Limited, and if I execute it, I can see the balance sheet. So this is the balance sheet. So balance sheet contains all the general ledgers which is related to the account groups, correct? So now if you see here, these are the different debit balances and these are the credit balances. So debits or credits are matching here. Okay. Next, let's go to the trial balance. So we give ICOA and we see 1710 and execute for 2025. So if you see here, the trial balance contains the list of GL accounts. So same in the same way, our trial balance, what our trial balance contains, list of general ledger accounts, correct? So this trial balance also contains list of general ledger accounts. On at last, the debits are equal to credits, correct? So the same way we also, for us also, the debits are is equal to credits. Now let's go to a particular general ledger account. So to see a particular general ledger account, for example, if I want to see this bank account, let's take this account. FBL 3N. I am going to the transaction code FBL 3N and I am giving this account and I am giving this company code. Let's see all the postings. So if I execute these, I have a balance of 1790. Correct? So where I have taken, so we should see all the clearing balances. Okay, double one double zero 1010 1010. So it is showing the debit balance is 0, the credit balance is 100. So when we see this combination, it would be the same. So now you can take some example like so this GL account. So we should also give, we should also give the all items posting date. So the system will take the historical data, correct? So for this also I think it's the same. So if I take this, I should only, so here when I am extracting my balance sheet, I have taken the fiscal year as 2025 and reporting period as 1 to 16. So from first month to the 16th month. So here also, let me take from first period as this is this follows till date. Let's execute. Let's see how to get. So we can see only 100. So in that period, only this document got posted. Okay. So this is the trial balance, and the trial in the trial balance we are creating this general account. So /o FS00. So in FS00 we'll be creating the relevant general account. So general account type. So account groups, we have talked about account groups, right? We have talked about account groups. So these are the account groups. When I am creating a particular account, for example here the GL account, it should be created under some account groups. So for this they have created this many account groups. So now I am bound to create this capital account under the account group capital. So here you can see, if we configure the system here, you will see the capital, and there you'll be creating this GL account and saving it. So we didn't went to the SAP. I am just relating our bookkeeping into the SAP by the examples. So now in the GL account, if you double click on it, you can see the general account, general entry posted. So they have posted indirect expense account data or to bank account. Okay. So how many accounts are impacted? 2 accounts are impacted. Now let's take the example first. General ledger. So these 2 accounts are impacted. So in these 2 accounts we have posted an entry expense account data to bank account. So now first general ledger is posted. So the general ledger is a journal entry is posted. JE is posted. Now the second thing is GL balances. So when I go and see in this account, I should see the bank account same as here. So I have posted one transaction, one general entry, for example, furniture account data to bank account. So in the general ledger, when I am going to the furniture account, I should see the bank account, correct? So when I am going to the bank account also, I should see the furniture account, correct? Now, in the same way, in SAP, there is this general entry. So now, to see the general balances, FBL 3N. Now I will go to the FBL 3N transaction, and here, so if I go to this account, I should see this entry, correct? So I'll be going to this account and all postings, and these two till date. Let's see the current year postings and execute. See, I have seen this entry. This entry is there. 100 is there in this account. And when I go to this account, so let me give the both accounts. So when I give this account, so I have an option to give all the GL accounts which I required, and with respect to the company codes also I can map. Now when I execute for this period, so in this GL account I can see 100 is there, and in this GL account also the 100 is there. So now you can understand. So the SAP also behaving same as the normal manual bookkeeping, correct? You can relate. So the ledgers, how here we are showing and how in the SAP it's showing, it's showing the same. Now the second thing is, so now the GL balances, now the ledger balances you have shown. So after that, after the ledger balances, what you will be you will be doing the trial balance. So the trial balance. So for the trial balance, you will be seeing this report. Now let's go to this report. So in this report, now I'll be giving only these two GLs. Okay. So I am only taking this example and I'll be showing you only these two GLs. So I'll be giving these two GLs here, paste, execute, and this is the period, execute. So here, if you see, only based on our trial balance, if you see our trial balance, these is the trial balance we have created, correct? So in the trial balance, we have bank account here, the same bank account. It is showing credit balance and interest expenses is showing 100. So bank account, it's showing credit balance here and interest account, it's showing debit balance. So our trial balance is also getting tallied 100. Now after the trial balance, now we should see these GL entries impact the balance sheet. I think only this will show, bank and cash will show in the balance sheet, and this will be accounted in the P&L account, correct? So this is a nominal account. This will be closed, correct? So let's see in F110 how it shows. I have an option to give the input of GL account. So these are the two GL accounts. Yeah, we'll be closing this session in 10 minutes. So I don't want to stop this topic. Let me execute. So let's see. So as I told, we only see here interest expenses 100 and this has 100. Correct. So because that nominal account, so nominal account, this is 100 and this has a -1. It's showing like this, and this will be transferred to the indirect. This would be transferred to the reserves and surplus indirect expenses. Now, so now I think you have understood like how we will be mapping, the SAP, how we will be mapping the SAP with the normal manual accounts. So what is the difference between manual books of accounts and SAP? Okay. So we have already discussed this in our previous classes. So let me take that and explain you. So accounting cycle, SAP and this. So now, so this is the accounting cycle. Business transaction happens manually, like purchase or sale of the raw material, and after that general entry. So general entry we should record anyway, the end user should record. For example, this we have recorded, and after that the GL account balances, trial balance and balance sheet will be automatically get created, but we should create manually in manual bookkeeping. But in SAP, everything will get automatically created once you post the general entry. So to conclude, SAP is an report. So SAP provide you a reports when you only give the general entry. All the reports are shown based on the configuration which you have made. And now, while coming to the manual bookkeeping, everything should be manually. There can be errors that can be flowed, and for the troubleshooting or reconciliation, it will take you so much time. But in SAP, the troubleshooting and reconciliation is also a very easy task. Okay.